5 Crypto Predictions for 2024. 1. Bitcoin and Ethereum Spot ETFs. While the big funds like BlackRock, VanEck, ARK and Grayscale, to name a few, are waiting approval any day now, they likely will not suddenly start buying huge amounts of Bitcoin and moving the market once they get SEC approval. The market will be moved on the announcement by Wall Street traders and the so-called dumb money. Why? Because they have already been buying Bitcoin through proxies, small subdivisions, and directly from miners. BlackRock has been buying stakes in mining farms directly and indirectly, so they can buy over the counter without moving the market. So what will pump the market, if at all? Since the big funds have already bought their initial stores of Bitcoin, the rally into ETFs will come from the high net worth investors and corporations who want exposure to Bitcoin as an asset and investment. Once demand grows enough, the funds will have to purchase more of the already scarce asset. Next will be the average retail investors like your mother, who is clueless about crypto but already invests in stocks through her trading app. She can't understand cold storage and certainly doesn't want the responsibility of self-custody and cybersecurity. A spot Bitcoin ETF is perfect for new crypto investors to get into the space without all the hassle of understanding crypto tech. Although this will allow the big fund managers to more easily manipulate the market as they already do with gold and silver. On the bright side, this will cause the market to grow massively over the coming years. Early investors will reap the benefits. What real effect this will have on the 2024 bull run is anyone's guess. But most likely we will see an $88,000 Bitcoin minimum. This is a bull market the likes of which we have never seen before. The normal rules won't apply. US election interference, cyber attacks, large-scale war, another fake pandemic, nothing is off the table and would disrupt the bull market or propel it higher if there is a currency collapse as people flee to Bitcoin, gold and silver bullion to protect their wealth from greedy central bankers collapsing the dollar in exchange for CBDCs and total control of humanity. 2. Halving in April 24th. While this is not a prediction, after the EFT pump and pullback to 38–31,000 between January and April, we will see renewed crypto excitement and interest. The halving will always signal a bull market for Bitcoin and crypto in general. Bitcoin becomes twice as difficult to mine and there will be half as much produced. Unlike fiat currencies, there is no one who can change the code to produce more out of thin air. The governments, central banks and big funds cannot control this. 3. Increasing inflation devaluing the dollar. US dollar weakening or losing reserve currency status and the stock market collapsing will cause people with money to get out of dollars and go into assets like housing, crypto, gold and stocks. A giant roach motel for crypto. 4. Banks like JP Morgan will likely become crypto exchanges where they will sell and hold crypto for you, but you will not be able to withdraw crypto. That's right. You will be able to buy crypto in dollars, but you will never actually own crypto. Never listen to banksters like Jamie Dimon. Watch what they do, not what they say. You will even be able to deposit crypto into the banks and sell it, but only withdraw fiat dollars. This service is already in operation in banks outside of the US. The good news is that this will allow new investors who cannot understand crypto or want the responsibility to manage their own custody of crypto to now get exposure to the new asset class. And of course, new investors means new money coming into the market space. More demand for an asset that supply is already dwindling will drive prices higher. The central bankers claim Bitcoin is used by terrorists, but let's not forget that JP Morgan banked for Jeffrey Epstein and many US banks have laundered money for drug cartels in US dollars for decades. Bitcoin is transparent and traceable. They want to control crypto, so this is their narrative, but their real intention is to control the competition as they change over to their CBDC central bank digital currency for even more power, profit and control. A rising tide lifts all boats. 5. The crypto total market capital is the total amount of money currently invested in all the crypto assets globally, and it is very small at 1.3 trillion United States dollars. For some perspective, the Forex market trades up to $1 trillion in a day. The space is tiny, and new money coming into crypto will cause massive investment and demand to enter the space. We say 3 to 6 trillion total market cap for crypto by 2026. 6. We will not see the 80 to 90% crashes we traditionally see after every bull cycle. In conclusion, how will you protect your gains? Wall Street feeds off the dumb money. That's you. And me too. They are experts at extracting your hard-earned money. They are smart, you are dumb. Our advice is to get in early and get out early. Learn risk management, take profits. For example, maintain a percentage in cash, so as the dollar amount of your crypto profits increases, your cash percentage will decrease, so take profits and maintain your cash reserve percentage, maybe 25% in cash. Another option is that if you have doubled your money, withdraw your initial investment and let your profits ride. This way, no matter what happens, you will not lose anything and have peace of mind. There are many ways to manage your risk. From stop losses to understand charts. We are bullish and are getting in now to get out before